How's it going, everyone? I hope you guys are having an amazing day like I am. I want to discuss Harmony, ticker symbol 1. This cryptocurrency has a market cap just under 400 million. The fully diluted market cap though is at 539 million, meaning if all these coins were in circulation, that's what the market cap would be essentially. So we're getting close to all the coins being in full circulation. I mean, 74%. You have a max supply of 12.6 billion tokens, which is a lot less than Refinance, which has close to 20 billion, and a lot less than Cardano, which is going for that same market for decentralized apps, and they're doing essentially the same thing. Harmony is very similar to that in a sense because Harmony utilizes sharding, and it's also working with cross-chain finance and all these DeFi. So there's a lot of use cases for Harmony that I find useful, especially in a world where the financial institutions and banks have failed their own people, and now we need something to replace that system. And in the world of DeFi, all this yield farming and just earning money through staking, more money than what you would get in a high yield savings account, is actually very possible. Before I show you the other important things that this has to offer for DeFi and finance in general, I want to make mention of these two protocol features that are so important and so just game changing for the world of DeFi, like transaction finality at 2 seconds utilizing one block. It's so much faster than Cosmos and Polkadot and what they can muster up. Validators is at 1,000, so there's 1,000 active validators where you can stake your one coins in there, your Harmony coins, as a delegator, and earn just fees just from putting it in there, from taking part of that liquidity pool. Transaction fees range from costing you nothing to 0.001, which is like a tenth of a penny. So minimal that you don't even notice it when you're sending a transaction or you're buying or selling utilizing this ecosystem. I don't know how recently this was updated, but it says that they currently have 1,000 active validators. They probably have more. I mean, in a network like this that offers 10% rewards for staking, I'd imagine that there's like an active growing amount of validators each day, and just growing in numbers. So that's subject to change. Obviously, the more validators there is, the more decentralization is available to that network, because there's just you don't have to depend on one whole validator for overseeing every single delegator and the tokens that are being put on there. But Harmony has designed a novel proof of stake, which is mechanism for network security and economics. Our effective proof of stake EPOS reduces centralization and distributes rewards fairly to thousands of validators. Our staking mechanism supports delegation and reward compounding. To support 100% uptime but fully open participation, EPOS slashes validators who double sign and penalizes elective but unavailable nodes. So it's great that their network elected to have that security feature, so that when a validator misbehaves, they can slash their rewards, and that just deters other validators from doing that in the future as well. In addition to that, the Harmony economics model caps the annual issuance at 441 million tokens, or about 3% rate in long term. Our model gives validators a simple and predictable return. All transaction fees are burnt to offset the issuance, naturally leading to a zero inflation when our network usage becomes high. So good stuff right there as well. If you want to read more about that, you guys can pause through this video or go to the official harmony.one website, which tell you everything about this cryptocurrency. I just want to go over the more important things, highlight its use cases. Like here, it has a cross-border finance and also forex and liquidity use case. With finance, it's because it utilizes the consensus protocols, and so it's going to be creating new economies with tokens and trading, and smart contracts enables and serves as a platform for collectibles and gambling as well. So that's something that this can also serve. Why cross-border? So open platforms work locally, but global users are the most underserved. That's the problem with cross-border payments and remittances right now. And it's something that Ripple and Stellar Lumens or Stellar, the company behind XLM, they want to focus on serving that as well. That problem, it's $1 trillion problem that Harmony also wants to get in on. And finance products within one country are already highly efficient and protected. While on the other hand, purely on-chain DeFi solutions without on-ramp gateways or local distribution have limited impact in real-world economies. So Harmony focuses on bridging high-growth economies in countries such as China and India, hence cross-fi to cross-border finance. Harmony remains an infrastructure layer. Our local partners serve customers with country-specific products and compliance. So that sounds more and more to me like this is an actual utility coin that has long-term value, just because of how the way it's going to be utilized. Another thing is that they aim to be compliant with those specific countries and their regulations. So that's actually good to hear as well. Now, looking at their milestones or roadmap, right now we're currently in quarter one of 2021. We're ending quarter one, but Ethereum endpoints, Web 3.0, MetaMask wallets, all those integrations are going to already be added by the end of this quarter. Trustless bridge with light client, fast date sync. Now we're entering this phase right here, 2021 quarter two, which is the rocket phase, as you guys can see right here. If I zoom in, decentralized voting power, VDF, resharding, Bitcoin bridge, native Bitcoin ERC asset swap. So you're going to be able to swap Bitcoin and ERC20 assets with that ecosystem, with Harmony. In their final milestone for 2021, they include the cross-shard contracts, cross-chain infrastructure, and also on-chain governance and on-chain order books. So when you start talking about cross-chain infrastructure, you get more into speaking about interoperability, and a lot of those things is something. Those are the themes that they're going to be focusing on 2021 for this project. It's decentralization, adoption, interoperability. Those things are going to be what keep this coin alive in the coming years, because interoperability is going to be king. Assets like Quant are the kings of interoperability. So yeah, I expect a lot to come from those assets that are truly interoperable. You know, I don't want to undermine the credentials or anything, but you guys can pause the video and read about the founding team, and they actually have a lot of years in background working with protocols and engineering, so that goes a long way, especially with Sahil Dewan. He graduated from Harvard Business School. He also attended and served as the president of the Blockchain and Cryptocurrency Club. So interesting. Now they have a lot of partners in their ecosystem: Binance, Ledger, Trust Wallet, to name a few that are large. Huobi, also Gate.io. Having these partnerships with established companies like this and a growing ecosystem goes along the way in showing that a project like Harmony has any sort of validity in terms of like it being real and offering some sort of value, which it does offer value in my opinion. Now this is just my own opinion. Like I said, this is not financial advice, but they've been featured in the Wall Street Journal, NASDAQ, CoinDesk, Cointelegraph. So obviously people have been talking about this project lately. It's been around since 2019. So and with the staking, people have been earning a killing just from staking this. And you're asking, like, how much can you earn from this? Well, if we go to the staking calculator, you can actually earn about 10% APY. This is per year. Let's be real. Like, at 10%, that's way better than the high yield savings account. I don't know where you're from, but in the United States right now, if you open a high yield savings account with Goldman Sachs or like JP Morgan and Chase or something, you're getting a 0.50% return every year on your money. That's like a 0.5%. When you compare that to this 10%, that's 20 times that. Okay, so if you get 10,001 tokens back, and each token ends up being around $4 at the end of a bull cycle, imagine you just cash out on those 10,000 tokens. You don't touch the principal amount invested. You don't touch the initial amount that you purchased, which is the 100,001 tokens that you began staking. That's your long-term bag for when it reaches $10 or more in the future, 5-10 years from now. But you only sell the 10,000 tokens that you generated this year from getting a 10% reward from staking. That's going to be $40,000, equates to around $3,300 a month essentially. So that, people are happy with even half of that or a third of that, even as passive income. This is money that requires no effort to make. Now the coin is rising in value. Since I started recording this video, it was literally like, I think it was 9%. Now it's up 13% almost. So yeah. So sorry it took so long to give you guys a price prediction for this, but I was trying to tell you essentially like the use case that it has, utility and potential and price with the staking and everything about the protocols and the team behind it. So you guys know if you are going to invest in this, you do your own due diligence as well, like I did, and I see that this is a solid project. So that's why I'm giving it that price prediction. So here's just my recap essentially. Based on the tokenomics of this token, the utility, also FOMO, and factor in a bull market, I think that at the end of this bull cycle, this cryptocurrency can reach about $4, like around there. I'm talking like this is like down the middle, not too high, not too low. This is my own price prediction though, my own opinion, not financial advice. Especially when right now people are already deciding what they're going to do with their stimulus checks, whether or not they're going to invest it or save it or even spend it. The people that invest it into digital assets, into the right digital assets, those people are going to come out rich out of this economy and out of this generation. Those are going to be the ones that benefit from that wealth transfer. But that's my own opinion. I hope you all enjoyed this video. I don't want to take any more of your time. And if you did enjoy this video, please leave a like and comment. It really does help the channel, and that's one way you can support me for real. And I'll see y'all later. Peace out.